Rightio, what's going on, Emp? How we
Yo, what's up,
doing?
Wolfie? Theta Warrior down there as well, joining in. How we doing today?
Doing good, man. Doing good. I saw you were catching some downside the other day, right?
Yeah, caught some yesterday, pretty nice. About the only move that we really had, other than the kind of melt up move. But boy, it's been a tricky market the last few days.
Yeah, no, it definitely has been. That is totally fair. Did you see some of those earnings reactions today?
Yeah, all over the place. Some mostly, I mean, some were good, some were negative. I was watching Airbnb and ARM. Both of those got beat up a little bit, but like Robinhood had a good report.
Yeah, Robinhood did get pretty good reaction. So just to recap a couple of them, ARM is down 9.2% in after hours. AB&B, last time I checked, was down like 7. It is down 8.25% in after hours. So you got a couple dropping off there. You did have a good reaction on Hood. It is up 3.5%. It sold off a little. It was up 7% initially. You did have initially a good reaction on Magnite as well. MGNI, that one is still up 11%. So that's probably the best reaction right here. Shy, were you paying attention to any others that I didn't call out there?
Yeah, I mean, I love HubSpot at 550. Want me to get into it, I can. I mean, they're down in first off, if you guys don't know about HubSpot, they're a CRM company. Rumors of acquisition from Google. Actually haven't heard anything about that for a couple weeks, but they are probably one of the more expensive growth tech stocks where they're trading at 100 times free cash flow and they're valued at $30 billion. That's a pretty wild couple of metrics to be combined with one another. Anyway, they're down 10% for the day. That's including after hours action. Their 200-day or the 40 weekly moving average is at, I'm looking at it as like 470 is what I sorry, not four, oh my god, long day, my bad. 551 is their moving average for the 40 SMA on the weekly charts. They bounced at that number in October bottom, like the 6 month rally that we just started in the tech world. That was where they bounced. I was off this exact trend line. They're at this line again right now. I do think there's a high floor in this name, mainly because, like I said, those Google acquisition rumors, they did not go away at all. They just haven't really provided additional detail. And they're at a key point right now. I do think they're going to bounce. It bounced in October, and it also bounced in March of 2023 as well. I do think it's respected, and it's a great, amazing tech, great fundamentals. It's just high valuation, but it doesn't really matter. I guess the valuation offsets the Google acquisition rumors. So I do love that combo, and I'm watching that for tomorrow.
Perfect. Appreciate the insight there. Well, thanks to everyone that's already in here. We might have a couple more speakers coming, but if anybody who's already up here has a chance to share out the space or retweet, it's always much appreciated. Looking forward to getting rolling here. All right, let's kick into it with Theta Warrior. And I'm really looking forward to the hour. And I know last time people had more comments to make, so I was excited to run it back. Theta, let me turn it over to you. We're kind of post earnings at this point. We got through Apple and a few others. Maybe you can break down for me how you've been trading over the last couple weeks, especially with some of the lowest days of volume in the entire year.
Sure. So thanks for having me on again, Wolf, and hello all the listeners and fellow panelists. Good to be back. Like you said, it's been a pretty slower, low volume week overall. Personally, happy to have gotten the majority of the, big names to report out of the way. I'm not much of a earnings trader, so I like the cleaner price action, intraday setups, and sometimes earnings on the horizon can kind of have a limitation to some of the range. So happy to get this behind us. After this week, certainly things are going to slow down much more in terms of earnings. But I've only been in 3 trades this week so far. I had a nice meta trade to the upside for anyone that was listening last week. Two of my picks to potentially see a move higher were Meta and Google. Weren't or I wasn't able to get into Google. Just kind of had one of those situations where it moved around the same time I was getting into the Meta trade, and I just decided to focus on the Meta position. So that one actually ended up being the bigger winner overall. So happy to have gotten into that. Got long when it broke over that 450 range, and it's had a pretty nice move to the upside. Netflix as well has been on an absolute tear. Similar situation where it just got crushed after earnings, and buyers stepped in, pushed it over resistance, and it's just had a really nice move to the upside. So whether you were in Netflix or Meta, definitely a big winner this week. So Meta has been my main big winner trade so far this week. Tried scalping some QQQ puts today. Got in a little bit early on my first round. Ended up getting pretty close to the top on the second, 440 puts. Full disclosure, still have a small position in QQQ puts. Reason being, if you look at the chart that I just posted about half an hour ago or so, the Qs have rallied up to, I think, a pretty interesting point where we may or may not see a rejection. I like this type of trade because I know if I'm wrong, I know we'll know quickly, basically. So if we get above yesterday's high, which we basically almost traded up to today, that kind of 442 range, I know I'm going to be wrong. So gives me a lot of potential room to the downside. Price is rallying up to test our current trend line resistance, which we've rejected upon 4 times currently. So looking for a potential move lower tomorrow and possibly into Friday. If we do see a crack of 435, potentially we could see a move down to 430. That would kind of be our next lower support range within this little megaphone or rising broadening wedge, whatever you want to call it, that we've been rallying in and kind of consolidating in for the last few weeks. Obviously, we had a big move lower. We've rallied up quite a bit, but we're kind of starting to hit our head right at the 0.786 Fibonacci retracement, and that's the one that comes right after the 0.618. So it's a big level. It's less used, but it's definitely one to keep an eye on. So we traded right up to it today and rejected. Ended up being a nice little trade. Looking for potentially a little bit more to come this week. So I guess we'll see how that plays out. Another really good setup that I have not had a chance to get in, but I am watching very closely is Walmart. That was on my free pick trade this week. Really, really nice looking chart, falling wedge, broke out yesterday, pulled back today to retest our breakout level. And I'd like to see it hold this 60 range. And potentially, get a BRB or a breakout retest bounce type of move to the upside. Generally, I don't like being in two conflicting positions where, I'm short one thing and long another, unless they are inversely correlated. But generally, if we're seeing a move down in the Qs and the SPYs, it's going to likely drag down Walmart as well. So I'll say that, with a caveat. If we're able to push above, our current resistance in the Qs, which is basically our current weekly high, I think Walmart is a really nice potential setup. Great swing trade. The 60 call, 61 call going out a week or two could definitely be a big winner if this market is able to continue pressing higher. But like I said, currently holding a small short position in the Qs, and we will see how that plays out.
So with that short position in the Qs, what's the risk management strategy as we continue to see movement? Because we haven't really moved in a couple days.
Right. So being an intraday trader, I really don't need too much of a move to be profitable. I got in this about 441 today, traded down to about 439. So captured about $2 to the downside, which, base hits definitely add up. That's the way I look at it. Home runs are great, but if you can drive in runs, that's definitely the name of the game. So I'm down to 10% of my original size. Personally, that's kind of the max that I'll feel comfortable swinging, just because of overnight risk. Anything can happen. My risk management is pretty strict. If I'm wrong, I get out. For example, I tried entering the 438 put before that, a little bit lower, kind of when we filled the gap today. We moved lower, opened lower, rallied back up. Breadth was improving, but still negative. Net options delta, big moving average, kind of collective delta change that I watch in the options market, which, by the way, I could do a complete spaces on this and talk about it for hours. Very, very cool stuff. If you ever see me posting any of the nod charts. So there definitely was some bearish activity when the Qs kind of came up into that 442 range. So after getting stopped out of my previous trade, felt the confidence to get back in. Very glad I did, made back my losses originally and was able to close the day green. So that's a win in my book. But yeah, basically just looking for, a move back down to today's low, either Thursday or Friday at some point. Puts are basically at the money now. So they've got about a 50 delta. So don't really need too much more distance to the downside for these to potentially really pay. So we'll see.
Perfect. Appreciate you kicking us off there. Just roll around a little bit here. And since we do have a smart panel tonight, if someone says something that you're like, that resonates with me, please just feel free to throw up a hand, jump in, whatever it is. Shy, Theodore Warrior mentioned a bunch of names there. What stood out to you the most?
Yeah, I mean, so I'm going to go on a broader scale over here where this is like the second, probably third straight week of earnings. We're about to wrap up of a once we have three full earnings weeks down under our belts, like I am noticing a trend. As is, if earnings are great, they do okay. They go up like a couple percentage points. But if they do good, it's a huge sell off. And this is happening during a time of a Q1 earnings, but during a Q2 seasonality of like sell May and go away. So I do anticipate a potential sell off happening specifically in tech in the coming weeks. I'm not saying it's going to be a drastic correction, but I do think that with the lack of volume they're seeing this week, which is impossible to ignore. So essentially, like, the bounce that we've seen this week, I count that as a nothing burger because there's been no volume to back that up. And we're seeing some bearish earnings reaction because mainly, again, a lot of these tech companies aren't guiding as aggressively as a lot of people have hoped. I do think they're going to have a potential sell off, especially since it won't take that much to kind of get that fade going, especially since I mentioned that the volume isn't there. So any kind of volume, it will just go the other way. And how am I positioning myself with that expectation that I have right now? I have two public portfolios, but my main one, my growth portfolio, is centered around AI, data, and e-commerce. What am I going to do to protect myself on that couple percentage downturn that I expect the QQQs to have? I'm finding the names that in the growth tech world that's the highest valuation that maybe falls under the same buckets of like the names I've been fading aggressively, the 15 to 20%. Like today, like HubSpot's down 10%. Like I called that out just earlier. I mean, Cloudflare was down 20% this past week. And even Datadog like went down 14%, Palantir 14% on really good earnings. So what's another name that's similar bucket of superior tech, necessary spot in the modern tech stack, but the valuation is just sky high among their growth peers? That name is MongoDB, ticker MDB. This is the top of the nosebleed valuations right now of them only growing 20% this year with mid-single percentage free cash flow margins. And they're trading at over 200 times free cash flow right now for this year. This combination, along with a consumption-based model that they have, where we already got the infrastructure players, the Amazons, Googles, and the Microsoft show that clear cloud reacceleration and the infrastructure is like definitely booming right now. But we're not seeing that trickle down from that to the software names yet. And because of that, I don't think MongoDB is going to be guiding up and going to that 23 to 24% range that I'm underwriting for the name to justify the current valuation. I actually think they're going to be doing the slight B of from 20 to maybe 20.5 or 21% guide for the full year. If that happens, this name will go break $300. And right now it's at trading 350. So knowing that I think the macro environment and tech world is showing signs of a near-term top along with the seasonality of sell may go away and nothing geopolitically has faded, like it's still there, those issues. And combine that with, I have no idea when the market's going to start reflecting on this polarizing election that we have in less than 6 months. It's less than half a year away, and it's not moving stocks yet, but it's for sure going to because it's going to be such a polarizing election. And I really think that all these things combined with each other there's going to be profit taking, and that's why we're going to see that dip. There's going to be a 4 to 5% correction. It's going to hit some key levels. This bounce that we saw in the market is nice, but it's not getting backed up with any kind of volume whatsoever. To get into specifics, I mean, just look at this week. Like, there's been back to back to back days of just lightest volume of the year, and the market's gone up a decent amount in that time. It's just there's no bears right now, or there's nothing to justify that bounce because the earnings was good, but it wasn't great. So yeah, I'm playing for some near term downside, but again, be picky and choosy. Like, I'm a long term bull. I think that we're in an earlier cycle than a later cycle in this bull market rally. I just think we're gonna get a quick couple percentage fade, and I'm picking and choosing which names in the growth tech field I feel is the most overvalued, that's aligned with the names that sold off severely this past couple weeks. And we use those cash flow that we get from those plays to add to my higher conviction names like the Snowflakes, the Teslas, the Palantirs. And you got to be nimble in this kind of environment because, again, because we bounce so quickly, I do think people are confusing today's environments to what it's been like the past 6 months, and that is not the case. This is a brand new chapter. The characteristics of that 6 month rally is completely different than the characteristics of this environment right now. Just because we recovered a lot of the key technicals doesn't mean it's party as usual, just continue the party, play the music. It's not the case at all. Like, we gave up the 21-day EMA, 50-day SMA in a blink, no, without any kind of flinching happening at all or any kind of resistance. And this bounce, like I said, it was great last week, but this week there's zero volume, and we haven't hit that all. Like, it is technically a lower high, and we haven't got that all-time high from this bounce. And I feel like it's going to be fading, but I'm curious what the panel thinks. And I'll pass it back to you, Gov.
Yeah, real quick, I would actually just say Theta. Do you got thoughts on which I flipped back over there? And then Emperor, I'm going to come over to you.
Yeah, it sounds like we're singing the same tune, and I completely agree with you. Making money to the downside and adding it to your high conviction plays, and um, I have long term positions as well. In Palantir, Microsoft, Nvidia, etc., and have no problem shorting them in the near term. Price moves up and down. It's foolish to only try and make money as an options trader to the upside. If you're looking at intraday swing, of course, that may be different. But an intraday trader like myself, there's always a move happening. So I think, if the market wants to move lower, nothing wrong with getting on the short side and making some money there on that side, and adding it to your higher conviction plays, just like you said.
Beautiful. All right, Emp, you talked for a few in the beginning of this. Also, Jordan, I know you're at something right now, but I see you in the audience. If you want to jump back up on stage, no worries. All right, Emp, walk me through a little bit of what you've been paying attention to, what you've been looking at.
Yeah, so I actually have a lot of the same thoughts. It's really interesting. So I mean, to be completely straightforward and honest, we've ripped up a lot further than I thought we would, but I still have an overall picture that we're not just going to go back to all time highs and make new all time highs right now. If that happens, I'll have a plan in place for it, right? So one of the ways I approach things is I like to make the bull and the bear thesis and then the sideways thesis. And then I see which one I like the most. And when that invalidates, then I have backup plans, right? So I do a lot of intraday trading with the futures, which keeps me out of trouble. Now, if we take a step back from that and we look at the bigger picture, just where we're at. So, I mean, it was mentioned, I think Shai mentioned it, 6 months of just almost straight up action, right? Just straight up into the right. And that wasn't sustainable forever. And so we finally kind of got the breakdown of that. So now we're kind of figuring out what's next. We got into this earnings season. And for me, when it comes to obviously my main focus is futures, but I do some swing trading and I have some equity stuff, over on the side. But for me right now, swing trading, this has been a period, and Theta kind of mentioned this, where I'm just kind of waiting for the earnings to get done with. I don't like playing earnings. I don't like holding much through earnings anyway. So I'm kind of waiting on this dust to settle down. both from the earnings season and then just in general with the market finally getting the kind of pullback or the mini correction that we had. And I kind of want to see what's next. So when it comes to there's some individual names you can still find some really good opportunities in, right? Earnings or not. But for me and my strategy, I've pulled back a lot on individual names in swing setups, probably since mid March or so. I'm not saying I've timed it perfectly or anything, but that's just where I started to pull back as we were getting close to earnings season. We started getting some of those hot prints. We saw some of the signs, right? So, we started seeing these commodities ripping. We started seeing semiconductor chips, NVIDIA and AMD kind of have a little blow off top type of scenario. And then, with gold ripping and the dollar ripping and yields rising again. So, for me, that was kind of a, let's take some risk back off the table here, and at least in the bigger term plays. So I'm kind of waiting, but in the meantime, there are a lot of opportunities here. It's been nice, the volatility, other than the last 2 or 3 days where it seems like it's been a little bit slower, but the volatility's been nice as far as intraday moves, especially on the indices themselves. Whether with me with the futures, I'm trading NQ mostly, and then some ES. But even the people that are doing the QQQ and SPY, calls or puts, you're getting some really nice moves, and it's respecting levels pretty well. But yeah, the overall picture, the pops are more than what I want to see when I'm looking to get on the short side of things. But once things break structure, you find some nice opportunities. So it's a very patient market for me right now. It's a kind of a sit and wait. You almost don't even want to take starters at times. You want to wait for a confirmation. That's kind of how I've been approaching it within my strategy, at least.
How are you playing next week's inflation data? Because I do think next week, after what happened in the previous data sell off, that we could get a disinflationary thesis coming back to like the headlines if we do get a drop off next week in the inflation data.
I think it's going to be really interesting. The last, other than non-farm payrolls, the last three, CPI, PPI, and PCE, all three were basically hot prints, right? Which I think it'll be interesting to see where they go from there. Now, a lot of times when that data comes out, sometimes because of the power of futures and the Globex market, if we have a spot where I can get into position overnight, and leave it and be able to trim out of it and just have like a runner going into a data release, sometimes I'll do that. A lot of times, just the way these reactions have been, I don't really like to touch it until the market kind of sets itself. Maybe even once we get the opening bell after that data print. But I'm not looking to swing anything honestly into this. I think that's our next catalyst. So we spoke about this some earlier today. Nvidia, I think earnings is going to be our next big catalyst overall. Just because of how high beta that is in that sector and the AI and everything, right? That was our big catalyst back late February that kind of gave us the next leg up in the market as well. But I think we'll get some intraday volatility, and it may give us a little bit more direction. But until we get those prints, Shai, I don't know. I just don't see the other catalysts in the market right now. I think we're digesting, not just the earnings that have just come out, but we're digesting the move that was made over those last 6 months a little bit. We finally got the pullback, and I think people are kind of sitting on the sidelines a little bit right now, trying to say, okay, are we going to get a further correction, or are we going to range here back near these all-time highs? Some of the earnings have been good, some have been mixed, some have had poor guidance. So I think the market's kind of looking around like, hey, what's next? What's going to give us the next tail to move? And maybe this this economic reports that we have. Was it Wednesday? I think it's coming out. Maybe that's our next. Our next sign that may give us a little bit of a new trend. Now, I don't know how long that trend's going to last. I'll let you two guys throw in your thoughts on that as well.
I don't think we're going to move at all until November. I really think we're going to be stuck. I think we're for sure going to hit the all-time highs of like 520. I think it's 525 for SPY. But I really think we're going to be range bound between 490 to 530 until November. I really think that there's uncertainty in the election is going to be a massive headwind where a lot of people will not feel comfortable investing in the market, especially with this massive run up we've had in the past 6 months. And unless we get some kind of clear catalyst in the earnings reports in the quarters of like seeing not just a good current quarter, but guides up, I don't think we're going to go anywhere in the market, which is totally fine because look at the last 6 months. Like we've ran up a ton. You kind of want to see some consolidation happening. I know one of the major red flags for me on the charts, what I look for is when the 50-day SMA crosses the 21-day EMA, that's an instant red flag for me. I'm like, oh shit. Is this a near term top? Is this going to go correct itself until it tests the 200-day SMA? Because guess what? The 200-day hasn't been tested in 7 months. It's been forever, and it's not even close to it right now. The SMA 200-day for the SPY is at what? Let me see. 470, and there's a massive shelf at 475. Like, I think it's inevitable that we're going to start getting, we have to test that 200-day level sometimes this year. You can't just go forever without catching it. And I do think those two technicals crossing each other with this, everything that I just called out of like, oh shit, there's a lot of noise and headwinds. That's why I'm like, I'm uneasy. I've had pretty insane returns the past year. Why risk the biscuit and just raise some dry powder on the sideline and just wait until I see the market
Right.
actually correcting itself?
Yeah. So one thing that we look for, as day traders, right, is we look for those moving averages, and when we get really far from them, we're not always trying to short it back to them. Sometimes we go sideways, during the day for a couple hours, right, and you just see those moving averages catch up, and then we get another leg. So it's easy as traders or investors sometimes to look at the technicals and say, hey, what's next, and sometimes you just have to let those moving averages catch up, right, whether it is on a daily, weekly time frame, or as small as like a 5 or 15 minute time frame, right. Those moving averages like to catch up somewhere to price. They don't just continue to run away from them forever, and obviously those higher time frames, sometimes that can take longer to happen, but I wouldn't be surprised, by that theory at all, Shai. Honestly, I'm very neutral to maybe some short-term bearish on the market, but I just don't see what's going to push us higher right now. And I see some things that could push us lower, but I also see, just a strong, healthy market overall that could just keep us in a range, at least, into the summer at this point. So I'll throw it back over to Wolfie. I see Jaguar jumped up here. I bet he's got some good thoughts for us tonight.
That's exactly what I'm thinking. Jaguar, I know we do our stock picking space a week, but this is a chance to maybe give a little bit more color to everything that you've been paying attention to, especially now that we're through most of earnings. We do have NVIDIA earnings still in a couple weeks. But in addition to that, we've got a CPI report coming up. So a lot's been going on. Would love to give you the floor here.
Yeah. Thanks for having me, Wolf. So I'm going to give you a larger context of things and then fine tune my discussion to specific stocks that I'm eyeing. Some of these names that I'm going to mention are the ones that I already have a position in. Some I will be soon taking a position based on the price action in the market and the fills that I get. So, in bigger scheme of things, I'm of the view at the moment that we have entered into what will eventually look like to everyone a prolonged digestion phase of the rally from October bottom to March peak. Now, this digestion phase, I mean, dare I say, could potentially go all the way up until elections. So pick a range in the market. I mean, if you assume that this digestion phase is 5 to 10% of the S&P, or maybe 5 to 7% of the S&P, you get 5,300, maybe 5,350 on the top. You get 4,900, 4,950 at the bottom. You get that range. Imagine staying in this range, playing the zigzag pattern along digestion phase all the way up until elections. If one doesn't recognize that you are in such environment, because momentum is the heartbeat of the market, right? And I say this all the time that you can be a bull with a trend in your favor, you can do very, very well. You can be a bear with a trend in your favor, you can do very, very well. But then if you enter into one of these consolidation phases and you're going to continue to get chopped in your call options and in your put options because market will take it away as soon as you feel like you have established a trend and then trend is no longer there anymore. That's what happens in digestion phases. So you have to change your style. You have to change your, if especially if you're an option trader, you have to change how can I make money in this environment. The beautiful thing about trading options is that it gives you that versatility to adapt to any conditions. There are neutral strategies that you can apply. And I'm starting to realize in the past couple of weeks that that's exactly what is warranted. And starting from this week, in fact, starting from yesterday, I have started to change how I am using option structures to benefit what could be a multi-month long range bound market. So instead of just buying calls on things I like or buying puts on things I want to short, now I'm selling credit spreads. And I have not done this for quite some time. And I'm doing RN condos. So if I believe that, for example, that Intuitive Surgical, ISRG, one of my favorite medical, robotic surgery equipment company, has a pretty good floor on the stock, a support that is very well defined, let's say around $360 per share. I'm going out a month and a half, and I'm selling bull put spreads underneath that price, underneath that floor, taking advantage that, okay, I could care less what happens to the stock, but as long as it stays above that price, and I'm selling the bull put spread, which is about 360, I'm going to bank full amount of profits on this credit spread because it will go to zero and I'll make the max amount of profit. Same thing on if I'm bearish on something, let's say Tesla, and if I believe that there is a ceiling on Tesla, technically speaking, which is, let's call it 195 or something, if you look at the chart, the technical levels. So here again, I am selling bear call spreads. I am selling going out 3-4 weeks from now because I want, and I typically don't like to do these kind of trades that are more than 45 days out to expiration because I want theta decay to be working in my favor, accelerating in my favor. And so I would, if I see that the ceiling on Tesla is 195, I would go something at that price or higher 3 months out, within 45 days out to expiration, and I would sell bear call spreads. I don't care what happens to Tesla as long as it stays below that price where I'm selling the short calls or bear call spreads. I never sell naked calls, just a bear call spread. I make money, right? So these are neutral to directional bets that do not require the stocks in which you're taking positions to move in your favor, right? Because again, the times when you wanted to be a macho man because the trends were very strong and in your favor, and you could pick up call options on anything between November and March and you could make money, very, very easy environment. I think that environment is probably over. And similarly, prior to this environment, when there was a lot of money to be made just shorting stuff and trading puts between July and October of last year, that environment was over at that time too in October. So when you go into these chop fest environment, you got to change your ways, especially if you're an option trader. So that's what I think. And if you're not an option trader, like not this way, not sophisticated enough, I think you can still profit and it's still good passive income if you simply just sell covered calls against your favorite names because they're staying in a range bound environment and just collect the money, free money. I call them rent against your assets. You're renting out your assets. So if you own the a property like a stock, you sell covered calls, you collect the rent 1, 2, 3, 4 months, because I fear that this kind of chop fest will be here for a while. I'll give you one another specific name, for example, that I'm eyeing. You all saw that last week one of the pharmaceutical companies, Amgen, symbol AMGN, posted an absolutely, I mean, the stock just absolutely had a monster rip higher after earnings report came out. If you look at that earnings report, right, if you look at the reaction in the stock price, big rally. But it wasn't because of the earnings. It was because Amgen disclosed with the earnings that they do, just like um, Viking Therapeutics, they too are working on a GLP-1 drug, for the weight loss. And most importantly, what they reveal in this report was, I'm going to quote, this is a quote from Jay Bradner, who is an MD at the Amgen's executive vice president of R&D and chief scientific officer, who said, I quote, given the profile we have seen with AMG 786, we will not pursue further development of this drug. Instead, in obesity, we are differentially investing in MariTide and a number of preclinical assets. End quote. Meaning, oftentimes, when a pharmaceutical company starts the process of drug development, and as they go through it, they often discover the efficacy and the safety profile of the drug under development is just so good that they don't need to continue the trial all the way to the end to basically unnecessarily spend the money that they need to just to get to the same answer that they're already getting in the middle of the trial. So they often stop the trial early, or they just end up reporting, even if they continue the trial, they just report the data early. And that's exactly what happened in this particular case of Amgen. Now, the full phase 2 data of this will come out later this year. I mean, for context, they're estimating that the market for this is, peak sales for the Amgen's GLP-1 drug will be about $5 billion. And they expect that to be about only 5% penetration of the $100 billion obesity market worldwide. So when you put the math around this, you will find out that this creates a very strong floor underneath the stock based on simple math, which happens to be right around $300 per share in the stock. So if you take the discounted free cash flow of a $5 billion peak sales potential, and then you figure out where should be the floor on this stock today, where the institutional support will be there, you find out it's about $300 per share. So you take a look at that stock today, it perfectly bounced off 300 as well. The point I'm trying to make is that based on this research, whether it's 300 or maybe you want to go conservative a little bit, you can say 290 or 295. That is where I think is the floor on AMGN. Now that you have this research in your hand and you have identified a specific price point in the chart where you feel comfortable, this is the spot where now you can go to the option market and sell a bull put spread, a credit spread underneath that price. Again, I'm not making recommendation here. I don't ever make recommendations on public forums, but just as an exercise, if you believe there's a floor at $300 per share, right? One could go to the option market and say, I am going to sell the June 290, 295 bull put spread for $1 credit. That's pretty much where it's priced right now, $1 credit. So, how to think about this? You just want the stock to stay above $295 per share all the way up until June expiration, which is about 44 days out. The stock is currently at 307. You're giving yourself a cushion between 307 and where you're selling the bull put spread with the short strike at 295. That's about $12 cushion, which on the percentage basis is about 4% based on your research. The way to think about what's your gain, potential gain on this trade is if the stock stays above 295 and the bull spread goes to zero, you collect the maximum. It goes away from your portfolio on expiration. The $1 credit on a margin requirement of $4, right? Because it's a $5 spread, you're collecting one credit. So $4 margin. 1 divided by 4 is a 25% return in 44 days. And all that needs to happen is the stock needs to stay above 295 for you to make that 25% return. It's passive way of making money, and it could be seen by many as slow money. But again, why do I even care for setups like this? Typically, in many environments, I wouldn't, because again, going back to the original point, momentum trading is the heartbeat of the market. And there are times when momentum is very strong, very easy identifiable uptrend. You can collect a lot of money trading call options. You can make a lot of money. And there are times when the momentum is simply to the downside, lower highs and lower lows continue. You can make a lot of money. But then there is this chop fest environment, low volatility grind. I mean, take a look today. Today's volume in the S&P, when I was checking at 3:17 p.m. Eastern time, less than 45 minutes before the market closed, was at 39% of daily average. Today's volume in the S&P at that time, 317, was less than what we saw on Thanksgiving Friday last year when market closed at 1 p.m. It was so dead today. It was just incredible. And VIX is just getting shot, just now all the way down to 12 handle. So if this is the new market, if this is the new paradigm shift, and if we're going to stay in this light volume, chop fest, boring summer months like this, right? And if you're going to keep looking, can I please get some momentum in my favor? Can I please get something to the upside so I can make money on my calls? Or can I make some money to the downside? So can I make some money on the puts? You're just going to keep getting chopped. Don't get chopped. Change your structure, change your style. Sometimes it's perfectly fine to be a passive trader. And in my way of doing that is by selling the bear call spreads or bull put spreads or iron condors and just capitalizing on range bound trading in the stocks that are always my favorite names on my screen. So I just gave you a couple different names here. There's still many other tickers that I'm still researching. And yeah, I'll bring those up. And sorry taking for so long, but hopefully this gives you some context of how I am approaching the market and what I think in big terms.
Really, really well put. Go for it, Theta.
Oh, I just wanted to say, very well put, Jag. Definitely resonate with what you're talking about, and completely agree that it's wise to adapt to the current market conditions that we're trying to trade. And I again completely agree with you that options are wonderful because there is a position that can profit in basically any type of market environment, whether we be moving up to the downside or even trading sideways. And before you even said iron condors, I figured that's what you were going to say. Great strategy. Another one that I would add, a very low risk, high potential reward is a butterfly spread, either call or put. Basically, in that case, if anyone's unfamiliar, you're looking for price to move to a certain level and just stay there. You can pay very little amount for these trades. So that, again, very low risk. And if you're right, the upside can be phenomenal. Being short a call spread or a put spread is great. Generally, let's say, you're short the 100 by 97 put. Maybe you collect $1 for it, about 30% of the width. Like you said, if price is able to stay above 100, you're making money. It doesn't matter if it's 101 or if it's 120, you're making money. And also, you will make money even if it dips a little bit below it. I mean, price could come down to 99.01, and the trade is still worth a penny, right? So there's a lot more potential for making money, I think, when you are short premium. But again, it's a lower risk, lower reward trade overall. The butterfly is great because you have that potential high reward if you are correct. I'll give you an example right now in the Qs. We're closed about 440. let's say you wanted to take a bearish position and you thought that the market may move down and close on Friday about 435. You could buy the 440, 435, 430 put spread. I don't have it pulled up right now, but I imagine it's trading around $1 for a $5 wide spread. That's going to be worth up to $5 if the Qs close at 435 on Friday. So a really great risk reward trade. Again, you have to be correct with the expiration, but it can definitely be a great tool for your arsenal and something that I really enjoy trading as well. Butterfly spread, definitely check that out if anyone's unfamiliar.
Let me just add some more, and those were fantastic points, all of those. And one, by the way, just like you mentioned, Qs, one can do this on index SPX as well. So if one believes we're in this range bound market within 400 points or 300 points in the S&P, I don't know, let's call it 4,900 to 5,300. Well, when you get on top of that range, like we're nearing right now, you go all the way out a month out, and you go all the way out to like 5,400 or 5,450, and then you sell a bear call spread when you get on top of near the top of the range. So like 5,400, 5,450 bear call spread, and basically just you don't want the index to go above 5,400. But and then when the index starts to roll over, it gets back down to that $5,000 zone, which has been highly supportive. At that time, you sell a bull put spread. Maybe like 4,850, 4,900. My goal is always to sell the short strike. That is, if I'm selling a bear call spread, my goal is always to sell a short strike that is above the resistance line, like a couple percentage points above the resistance line. And if I'm selling a bull put spread, where the short strike is a couple percentage points below the support line. And if you're doing iron condor, same exact mechanics there too, right? No different. So there's a lot of different ways to create and do about this. One last thing I want to mention here. This is a little bit of an educational. The way you should think about this, and I wrote a whole big article piece about this many years ago. You have to go all the way back to 2017, 2018, so 6-7 years ago, when I wrote this entire piece and I sent it to clients. And it's a rule that I developed for myself, which is something I adhere to very, very tightly when I'm doing credit spreads. And I call this 5-10-20 rule. 5-10-20 rule. What is 5-10-20 means? So, and this is strictly when you're doing credit spreads. 5 means 5%, meaning that no trade you ever do in your portfolio when you're selling credit spreads should be more than 5% of the total portfolio value. So think about this: if you have $100,000 in your account and you're selling let's suppose you're selling a bull put spread on Amgen, the example that I gave earlier, you know, the margin requirement that you will have for selling the credit spread as a percentage of the total portfolio value should be no more than 5%. That's the rule number one. Remember, the rule is 5-10-20. The second rule is 10. What the heck does 10 mean? 10 has to do with the distance, ideally, the distance between where the current stock price is and where you are selling the short strike, meaning the cushion. Doesn't matter you're selling bear call spread or bull put spread. The cushion between the current stock price and where you're selling the short options, the short leg of the spread, must be at least 10%. That's your cushion. Now, this is sometimes very, very hard to find, especially in an environment where you have VIX down to 12 handle. Volatility is already cheaping up during these summer months that are coming ahead, right? And so, So it's very hard to find that much, but with 10% cushion, but you can probably find 5, 6, 7% cushion. I'm still okay with that. And then the last piece is 20. What is 20? 20 has to do with the minimum acceptable return on the trade must be 20%. And this is based on simply taking the credit that you're receiving for selling the credit spread divided by the margin requirement, right? And so minimum acceptable return should be 20%. So for example, if you are doing a $5 spread and you're collecting $1 credit for it, your margin requirement is 4. $1 divided by 4 is 25% return, right? And that is acceptable. So 5, 10, 20 rule for doing credit spreads. I wrote about all of this in a big giant article. I sent it, explained it to all my clients, and back in 2017. And every time when I do spreads, these are the rules that I follow. Just talking my own book here, you gotta have rules. I always say this: you're all traders. We're all very, very smart traders, right? Um, eh, you know, have a plan, have a rule. Even you know, even a bad plan is better than having a no plan at all before you go into a trade. You have to know what your plan is with the trade before you get into it, right? Same thing with the rules. You must have some playbook to work with rather than, oh, I just woke up and I feel like pushing some buttons, so I'm just going to randomly pick a name and just buy some shit, some stuff, see if it works out magically. Have a plan, have a rule, stick with it, improve it, refine it. The more you learn from it, and the better and better you will get it with it, you will get better on it over many, many years of doing this. So this is just one of my rules for doing credit spreads, and it has served me very well over the years.
Love the discussion here. Killer thoughts from the crew. We're going to run till the top of the hour. I do want to mention that at the top of the hour, we have the pleasure of having David Meltzer, who joined us a few minutes early here. Thank you for hopping in. Who we're going to be able to chat with. He's the co-founder of Sports One Marketing, legendary CEO. Inspired his company actually inspired the movie Jerry Maguire, and he's really just made a huge impact on my life and a bunch of others. So excited to get into that. That's coming up in a few several minutes here. Real quick though, Jaguar had some awesome pieces there, and Theta Warrior chipped in. Shai, did you have some thoughts on what Jag was sharing?
No, I mean he reiterated what I said earlier on the call in a much more elegant way for sure. But it's gonna be a choppy market. We're gonna be in this range of, I said for SPY 500 to 530 until after the election. Like I think November is the time where we're gonna actually be showing some kind of volatility. Either I think to the upside, but it could be the downside. But I don't think we're going anywhere unless we see a clear sign on earnings season of guides up. Right now, we're not seeing that. We haven't seen that in the past couple weeks. We'll see in the next quarterly earnings if we get that, but highly doubtful just because C-suite members are going to be conservative due to the polarizing election in 6 months. So like, why risk the biscuit? Just play the safe route. Continue doing that routes. So yeah, I think we're going to be in some pretty big just tight range, and what Jags called out, like you can essentially get paid rent to fund those positions that you want to continue adding because they will not be going anywhere, in my opinion, like at all. I just think we're gonna be around the same price for the rest of the year, which is fine. We ran a ton, and now it's time to collect some rents. In the meantime, while the market doesn't go anywhere.
It could be a very ugly phase of elections, Shy. I mean, I don't know what lies ahead, and I'm not going to predict politics, but yeah, it could it
Wait,
could be ugly phase.
Jack, I've been QAing everyone's input on this because right now the market's not factoring the election at all. When do you start thinking the election noise will start trickling in the headlines and also like the market
July,
price action?
August, roughly that time frame. And by the way, those September, October months don't have good seasonality anyway. They have the worst seasonality of all. That's where the volatility could start to come back into the market after we sort of like cruise through summer low volatility months. Go enjoy the beach, go enjoy the swimming pools, and just have a good time. Low volatility of doing nothing. But then come back August, September, fireworks, election coming up, which could be an ugly phase, and that's when you get much more active on the directional bets that you might be taking. That's how I would approach this. There was a note out, I believe it was from Goldman Sachs, and I have it somewhere in my computer, file saved, but it's not on my phone. So I'm going to paraphrase this, but I read a I read a paragraph in it in which they basically made this very point that uh, this market is extremely underpricing election risk. That's how they pretty much worded it in more elaborate way, naturally, than how I'm saying here. But and I think that it's not just Goldman Sachs. Many other shops are probably also noticing this. This is one of those moments where it's calm before the storm. You have VIX with a 12 handle, extremely peaceful, calm markets, and significantly underpricing election risk. Now, what did Goldman Sachs mean by that to begin with? Well, Goldman Sachs meant by that um, there may not be imminent results on the election eve, who the president is going to be. It may very well go to a spot where elections are over, results are in, but they're being contested, and now it becomes a court battle, and markets do not know who the next leader is going to be, and it could drag on for a very long period of time. That is the phase where uncertainty could bring a lot of volatility in the market, and you may start to see phases of that gradual increasing volatility environment even before the elections happens, which takes me back to August, September, October periods as being the most volatile months. So um, it's calm before the storm, and I don't think these elections are going to just end smoothly. I think there's going to be some fireworks.
Really well put. Just gonna do another minute or two here before we roll in with David, and maybe we even get some stock market thoughts there. Theta, anything else on your mind?
Well, I just want to say, very well put. A lot of great points by all the panelists tonight, and I just think pay attention to what the market is telling you. Things change from day to day, hour to hour, week to week. We have a lot of information coming out almost daily now, so just be willing to adjust your bias, and don't be afraid to flip sides if the market tells you to do so. Stay nimble.
Yeah, 100% agree with that. How about you, Emp?
No, I mean, I couldn't said it better than any of the other guys that have spoke so far tonight. I mean, thanks Jaguar for those points. Really liked it. Um, I mean, stay nimble, right? Theta just said it. Paint the big picture, paint the medium term picture, and then look at your short term intraday picture as well. Make sure you're seeing all three. Stay safe out there, and don't ignore the signs, right? So that's what I'm looking at here. You can always be patient. You can always wait. I'm actually going to take Jaguar's advice and head to the beach this weekend for a few days.
Sounds fun. And Jag, you give a lot of good insights here. Any other comment for yourself before I roll into this next chat? And by the way, to the folks on stage, if you're able to stick around, I do encourage you to do it. A lot to learn here from our next speaker.
Yeah, no more comments. I'll just finish it by saying that next week we have CPI. Expect around 3.5%. Only thing that will matter for the market perspective is whether the 10-year bond yield goes up or not. If the 10-year bond yield stays flat, right around here where we're at right now, 4.4, 4.5, market's fine. But if that thing shoots up again, takes the next leg higher towards 5%, then yes, expect some volatility. So all eyes on the 10-year bond yield next week.
Perfect. All right. Huge thank you to Jag for co-hosting, Theta Warrior, Shy, and for being on stage. Jordan, I know, is hanging out with us in the audience. We're going to roll right into this next chat here. And for those that can stick around, all are welcome. To those that can't, please do have a good evening. But David, can you hear us loud and clear?
I can hear you loud and clear. How do you hear me?
Oh, yeah, we got you. It's perfect. Thanks so much for coming on with us this evening. Super excited to hear from you. For those, I gave a brief introduction, but it's hard to do, David. You've accomplished a lot. Could you give a brief intro for those who are unfamiliar and didn't catch mine?
Of course. I started my career in technology. My first exit with West Publishing when 1995 for 3.4 billion, and leveraged that into being CEO of Samsung's phone division, the world's first convergence device in 1999, which was better known as a smartphone with Windows with Microsoft. It was a CE device, which ironically led me to my sports career because Lee Steinberg was looking for a new CEO. His partner and him had sold the baseball practice for 90 million, and he bought into the Diamondbacks and hired me as their CEO, not because I was a great lawyer or an amazing sports agent, but because I had a venture background and a technology background, which separated me skills wise, knowledge wise from other frustrated athletes who became lawyers and wanted to be Jerry Maguire. And they made the movie Jerry Maguire about our firm. Later on, partnering with Warren Moon, who was one of my partners, the Hall of Fame quarterback, and built a global sports marketing company, Sports One Marketing. And over the last 7 years, working with people like Gary Vaynerchuk and others, building my own personal brand, writing books, speaking, coaching, podcasts, movies, TV shows, and a variety of other content in order to facilitate elevating awareness on how to make a lot of money to help a lot of people and have a lot of fun. So it's an honor to be here and hopefully give some more traditional perspective on whatever it is, mindset, heart set, and handset wise that I can to help facilitate that more abundant attitude that I think is prevalent and necessary in the markets, all markets, by the way, as well as humanity.
Really, really well put. So you've been through the gamut, right? Sports, business, you've made fortunes, lost fortunes, made fortunes back. When we have people in the space here that are, I really think, trying to take their money and turn it into more money. They're trying to provide for themselves, right? That's why people come to my spaces. They're trying to achieve financial independence. How do you break it down to, a system almost, right? These are the things that you need to be doing on a daily basis in order to achieve that.
Well, there's a few things, and I think a lot of people ignore the simple things. And I just want to remind everyone to elevate your awareness to the simple things because one of the lessons I've learned by making over $100 million, losing it and making it back, is the simple things to do are unfortunately simple not to do. So I look for the simple things, and some of the simple things that make a difference is one, why you're here. It's ask for help. Find people who have sat or do sit in the situation you want to be in and ask for help. The fastest way, no matter what you're doing, to get to where you want to be or better is to find someone that's already there and ask them for directions, especially when we're talking about investment and the markets. I study history, and I study history along with asking for help because human nature never changes. And if I can leverage the dummy tax that others before me have paid, and which is why I do what I do, so that you don't have to pay the dummy tax that I paid, which, by the way, if people are fretting the taxes of New York and California and other states, don't worry about that at all. 12% is nothing compared to the dummy tax that most of us pay because we are not humble enough to ask for help and to find people to create this community like you have of people that want to help each other and know people that can help each other. So, number one, study history. Two, find someone who sits in the situation that you want to be in and ask them for help. And then three, know your timing and risk tolerance. Inherent in all of the advice that I've been hearing while I'm here is these rules to live by. And regardless of whether you're disappointed or not by the strategy or the rules or the system in which you create, it's basically an analysis of knowing your timing and risk tolerance. Any type of investment in yourself, going to school. So many kids ask me, should I go to college? Should I go to law school? Should I do this? I don't know. What's your timing and risk tolerance? And looking at the history and with the help of mentorship, and then aligning what you want with the timing and risk tolerance that you have, although things may not work out in your favor, you will only be disappointed. You won't be resentful and guilty, and you will continue to learn. And so I highly encourage everyone to follow these three simple steps, notating that the simple things to do are simple not to do. But please study history, find mentorship, find people who sit in the situation you want to be in, and most importantly, know your own timing and risk tolerance, and let that lead as a framework to all investments. Because as long as you have aligned the opportunities that are doing well, that are stable, that you think are going to do well with your timing and risk tolerance, like I said, you may be disappointed, but you'll never be resentful and guilty, which are, to me, the greatest interferences of a long term success in investing.
Beautifully put. You luckily have not kept your thoughts just to yourself. Obviously, you've shared them on stage many a times. I've been at your conference. You do many of them. You also have put them into a book. You wrote a great book, Connected to Goodness. I actually was able to get a link for the audience, and this is for free, I believe. You can get this for free. You can get it ebook or audiobook. I believe you can even get a physical signed copy sent to you if you are in the United States. Is that correct?
Yeah, I'll pay for shipping. I'll pay for the book. I'll
Sheesh.
sign it if you want me to devaluate your investment. I'll do that as well. A lot of people like it signed. But yeah, I'm on a mission to help people to make a lot of money, help a lot of people, and have a lot of fun. And I've created a framework in that book that has helped so many people around the world make millions and have fun with it. I made money the wrong way the first time around, which is why I lost it. I had lessons to learn, and I believe that the combination of the wisdom and the faith that has resolved from the stupid mistakes of my past have allowed me to come up with a formula that I give out in that book, ebook, audiobook, or I will sign a book, send it to you, pay for shipping, pay for the book. Just go ahead and use that link. If you're in the United States, I'll send a physical copy and sign it, like I said. So please, everyone, give it a chance. I promise you, these are great steps in a framework to make your own, so that you can live a better life, even better than you can imagine.
And I encourage y'all, you can go get that book for free. I just posted a link to it. He literally said he's going to pay for shipping and the book, and if you want, sign it to you. And he's pretty much a living legend when it comes to the sports and business world. So I do recommend you go ahead and you check it out and dive in with that. So I love the lesson. So David, I'm curious because we run a lot of these sports spaces, right? We launched Wolf Sports, and the big focus here is connecting with athletes and just having an excitement and a passion for this. And what I've told people is, finance is definitely something I'm excited about. I can talk about it clearly 10 hours a day. I do so on Spaces, but sports have always been that passion for me. You went more down the sports route. How do sports and business intertwine with you? What part's passion? What part is work? How does it all work for you?
So it's ironic that I ran the firm that they made the movie Jerry Maguire about, because sports to me is the passionate backdrop to everything that I do. Sports itself is not even an industry anymore. It is literally its own backdrop. Any type of skill that you have, any type of knowledge that you've gained of who or what, and any desire you have, from traditional art to marketing and media to facility. They're all applicable to the backdrop of sports. In fact, so many people will come up to me and say, "Oh my gosh, I can't believe they made the movie Jerry Maguire about your firm. I want to meet you, and this is so exciting." And I said, "Well," they'll say, "Oh, Jerry Maguire is my favorite sports film." I said, "It's not a sports film. It is a love story in a backdrop of sports, and that's why everybody loves the story. It allows men and women alike to enjoy a movie with the backdrop of sports." So, what I want you to consider is, instead of focusing in on some sort of industry, career, or job, the best piece of advice that I have is, let's all focus in on our skills and develop those skills to the highest level. Let's develop the knowledge of who and what, and let's apply our why. Let's enhance our desire. The common denominator, I have a podcast called The Playbook. We've done over 1,800 episodes with everyone from Deepak Chopra to Cameron Diaz to Brett Favre, and the list goes on, Tillman Fertitta, and all the great chefs of the world. It is an eclectic playbook of success, but the common denominator is that you must have the desire to be what you must be, and utilizing the development of enjoying the development of the consistent, everyday, persistent, without quit pursuit of your potential through your skills and your knowledge, and then apply those to sports. Whether you are a landscaper or or an architect, whatever you want to be, skills and knowledge wise, I promise you there's an opportunity within sports to enjoy what your skills and knowledge are, to utilize your desire to be what you must be, and to make a lot of money and help a lot of people and have a lot of fun if sports is your passion. I will tell you, sports is more than a passion to me, it's a lifestyle. I've learned more by being an under average, a below average college football player than I've learned in getting my Juris Doctorate, my law degree, my business degree, by going to some of the finest personal development programs in the world. Still, the greatest lessons I've learned is to be a below average college football player. And there's a lot to learn still today. If you play sports or participate in sports or even watch your kids play sports, there's even more to learn. So, highly suggest using the backdrop approach and focusing in on your skills, your knowledge, and your desire.
Really well put. I want to get a couple of people on the panel to share some thoughts, but real quick, I see people commenting they're already grabbing the book. I do want people to have the opportunity. Again, I don't make any money off this. Cost David money, but if you would like the book to be able to take yourself to that next level, just DM me the word sports right now, and I'll share that link with you. I know we have some fans in the space. Shy, former D1 athlete himself. Do you have any thoughts or questions here for David?
Yeah, yeah. Thanks for that, Gob. So, David, I definitely looked you up to watch some of your interviews before this call. I saw that we knew some of the same people. I don't know how much you know David and Dana Pump
The
or
Pump,
Barry Rudin,
the Pump
the
brothers.
Pump brothers.
Yeah, man, they're my two
Yeah,
redheaded stepbrothers. I love them.
they're hilarious.
Don't give them
That
your
was my
cell phone number,
A.
everyone. You will never have a harder closer than David and Dana Pump. They will keep on calling. They don't, no means call me more.
Oh my god, it's hilarious. They're definitely hustlers for sure. I was on their basketball team. That was my AAU team, the Pump Brothers. But
Nice.
yeah, they're super funny. What was I going with this? Oh yeah, I resonate completely what you said about the the below average college athlete. Like for me, I'm a 6 foot Persian point guard from Calabasas. Like I played at Indiana, but like I was playing with NBA stars like Victor Oladipo, Cody Zeller.
Yeah.
But I learned so much just by being the bench warmer or just like during practices of like how they played basketball and how like people at that level of success deals with certain day-to-day obstacles. I carry that throughout my corporate strategy life, even like stock this conversation like in my internet friends via stocks. Like I that carries with me from industry to industry. So I definitely resonate with that. Fully agree. Question for you though. How is the environment different now in the sports marketing environment than it was back then when you initially had that firm that Jerry Maguire based it off of? Because players right now or NBA professional athletes essentially are owning their own stuff, or like they're owning their own ecosystem now. Where before, they had to go through agencies and firms like yours prior before that for Jerry Maguire was based on. How is it different now than back then? Is it more difficult? Barrier of entry is a lot more severe because the players essentially are owning their own ecosystem.
Yeah, that's a fantastic question. I just have to tell you, there's a big place in my heart for IU. My daughter graduated Kelly, and we have a couple homes down in Bloomington, and I still work with Cuban and Pizzo and Sage Steele and Coach Wood. Woody there is a good friend of mine, so I get to still participate in IU basketball. So I can imagine what you've learned in Indiana from playing basketball. But as far as sports
Yeah, I
marketing,
mean, don't talk to Coach Crane because he hates me. So hopefully you're not on good basis with him.
yeah, Coach Woodson's a good friend though. But yes, sports marketing is interesting because it's actually a lower barrier of entry to participate in it. Because the rule of marketing and sports marketing and sports agentry is to get a client and keep them. And it used to be more difficult because there was less clients and more gatekeepers to those clients. But now there's so many different ways to market a player that you don't necessarily have to be an extraordinary player. There's so many different athletes. I mean, look at like Lewis House, for example. You know, he maybe played a cup of coffee in the league, but obviously marketing himself, McAfee. These guys, there's so many sports marketing opportunities for every sport by individuals and the communities that they build. And I think that's the major difference is where the social silos exist compared to the mass communities that you would have to address as a marketer. So being a name brand marketing company with Warren Moon and Lee Steinberg and representing Troy Aikman and Steve Young and Lennox Lewis and Evander Holyfield and Sabathia and Ramirez, all of the different players, for us, it was a lot easier back then, but for the smaller guys, it was much more difficult. Here now, individual marketers, and there's multiple types of marketing. There's not just your typical sports agent or marketing firm. As you know, there's so many different SEO funnel digital marketers. There's so many different ways to participate in sports marketing today, whether it be for facilities or platforms or businesses or brands or athletes, celebrities, entertainers. You can see from pickleball to the big three to, Rabel, for example, is a good friend of mine. What he's been able to do in sports marketing off of lacrosse, and then there's rugby, and then the women's side of stuff, and what we're seeing with Caitlin and others. So I think there's a lot more opportunity, uh, and those people that know how to get clients and keep them are going to make a lot of money. Those people that are in the game because they love sports and they're not focused in on their skills and knowledge of who and what, they're going to die out. And so, just like real estate today, right? What 50% of the real estate agents have dropped out because the game got hard. You'll see the same thing in sports marketing because the game will get more difficult, more competitive. But I will tell you the simple truth about sports marketing and sports agentry, those people that know how to get clients and keep them, you're going to do extremely well because there's so many more ways to market and so many more opportunities to market than there ever has been.
No, I love that answer. I fully agree. Appreciate it. One other question I also have. Let's just say Bob Iger calls your cell. Says, David, I want you. I know ESPN's a valuable IP of ours. We're fumbling the ball on how to execute. How would you? We want to offer you the CEO position of ESPN. What's your action items on how to turn the ball around?
Oh, absolutely use the stage theory. So, what they're not doing is they're using scarcity in a closed environment, thinking that the ESPN and the sets themselves are going to create the community. They have to allow the freedom, just like in the NBA or other sports, they're allowing the freedom of the athletes themselves to market themselves. And it just all tides rise because of the individual branding in the NBA, for example. They don't let that happen at ESPN. They don't allow so many of the biggest names on ESPN to build their own audience. It would only allow ESPN to grow. And instead, they close them off from being able to participate in different content, of course, different podcasts, having their own content. And I think it's the dumbest thing. See, Shakespeare had it right years ago before it was actually true. I don't know how he had that insight. I remember when I told you Lee Steinberg hired me because of his vision of the future. He said venture and technology are going to be the future of sports. Shakespeare said the whole world is your stage. And that's what ESPN is forgetting. They think that ESPN is the whole world, and it's not. The whole world is their stage. So they should be capturing the content on ESPN. They should allow all the individuals that are hired and work for and work with ESPN to capture their content as well. They should be modifying it. They should be amplifying it through all the different people interviewed, all the different platforms, all the different channels that are out there on in person, on the phone, via email and social media. And they should be perpetuating it, creating a social silo by subject matter, topic, expertise, by different sports, verticals, industries, careers, by different personalities. And if they did that, I would tell Bob right now, that's what I would do as CEO. I would create exponential growth, acceleration, and aggregation of a community before it continues as it has to dissipate and eventually dissolve. Where, to me, it's incredible that I'm more well known, a middle aged mutant turtle as a quote unquote legendary, that just means you're old, legendary sports executive, I'm more well known than Sage Steele, and that's incredible, right? It's incredible that I have a bigger following, more people know who I am, recognize me, than one of the greatest women anchors on ESPN. It blows my mind. It is because they don't allow for the stage theory. They don't allow to take advantage of what they've been given. Instead, they feel as if this proprietary usage of content is going to help them in the long run, and it's not.
Well, you just got me hyped up for that. I really hope Bob does give you a call, because I fully agree. One last question I have. I think there's some room for synergy in business and sports in the future. What that might be, I thought treat players like a stock market, like Anthony Edwards blew up. I wish I could invest in him a year ago and I'd make a return on like his progress or whatnot. Or if I want to like certain NBA teams or NFL teams become actual entities in the stock market where you can buy a certain percentage of that team or what. These are all like total unicorn ideas. But do you have any like I don't know, thoughts from left field of how you can kind of synergize sports and business market together, where the retail people can actually own some of the progress of these leagues, players, etc.
They do that already. So they're already uh, have some, we've invested in a few, and it's even outside of the blockchain. The blockchain even makes it easier to utilize a personality and invest in a career. So there are some companies, you just Google it out there, but you're right on it. That's the future. Uh, excuse me. It goes beyond betting on the game or betting on a play. It goes to the equity side of owning a brand, whether that brand be a team, a league, an organization, or even an individual athlete. They already have those type of solutions. They haven't gained the mass knowledge even or awareness, but they will. And in the next 10 years, especially in blockchain, you're going to see a lot of eighth graders selling off millions of dollars of equity in themselves and taking money off the table at a very young age for their families. And it's the next level of NIL.
Wow. Well, you just might have convinced me to actually submit to my fiance's baby fever if that's the case. Might need
You
to get a
should.
squad underneath me.
I got 4
But I
kids.
appreciate David.
Definitely do it.
I'll pass it back to Gogs. That took up a lot of time. I appreciate your answers, David.
All
Thank
good.
you.
Emp, go for it.
Yeah, David, thanks for being on here. Some great stuff, really interesting. Former D1 athlete myself, like Shy. My question for you is your world of sports agency and marketing. How is NIL, which I mean, we know it's changed the game, but how is that developing? With these athletes now. Back when I was in college, our bar tab might mysteriously disappear at the end of the night, but that was about all we could get away with back in the day. And now you have these contracts and scenarios. How does the representation work with these college athletes? Are future stars, are they being looked at and signed long term? How are you handling that, and how are you adapting to NIL as it's changing college sports as we know it?
Oh my goodness, it's like the wild, wild west. I just spoke up at Oregon yesterday. I was with Coach Dan Lanning, and obviously they have a ton of money. Phil Knight himself had donated another $430 million. $430 million just for a practice facility. The average athlete's making in a football program a salary of $30,000 to start. The starting quarterbacks are making millions of dollars. The deals are starting in the eighth grade, and the dollars are insane. And so, understanding that it's going to cut off about of the 133 Division One teams, there'll be about 100 that are going to die and not be competitive, just because where the dollars lie and what it's going to take to get the best players to the best programs. So, as professional leagues have 32 or so players, teams, I'm sorry, you're going to see the same thing in football. The question is, what does it do to the NCAA and the other sports? I assume by what you guys have said as D1 athletes that you weren't college football players. And where the interesting thing with NIL lies is, how do we develop volleyball players and the golfers and the water polo players and the soccer players, all the other sports? How do we fund those projects if the money's going to be cannibalized by individuals and the football program? Because that's where the money lies. And there's no doubt that it's for the betterment of the entire institution. But if only 33 of the 133 Division I schools are able to compete, that's going to create a real problem for all other sports in D1, unless we can figure out how to market and create some dollar and expenditure for the equity and inclusion that sports provides. Look at Colorado. Like, I was just amazed when people say we shouldn't fund a football program. Just by bringing Dion into Colorado, their applications were up 3 times. Their applications were up 3 times. Their average GPA of acceptance this year went up 0.5. Like, what, if it was 3.2, it went to 3.7. Or if it was 3.5, it went to 4.0. The whole institution benefited from it. The problem is that the schools, not all schools have that type of money and alumni that are going to be able to provide those type of dollars, and it's going to create a whole nother division in that powerful top 30 division. Is going to be an interesting thing, and I want to see where the money goes outside of that. It's obvious to me in that top tier football side what it's doing. It's what do we do with the distribution to the other sports? And as you guys know, whether you're a man or a woman, in the Fortune 500, for example, over 90% of the C-level executives that are women in the Fortune 500 played college sports. Over 80 some percent of executives played college sports. So the impact of people that are in this room that are not the Division I college football player that's getting $500,000 to $10 million now, we're the ones running the world, and we're running it well from what we learn on the field. So to me, it's understanding how can I build a system that supports through NIL everyone except for those D1 football players.
Perfect. I'm going to jump in here because we only have about 3 minutes left on this chat. And Rip, I just want to make sure if you had any comments, you had time to get them in before our next space.
Yeah, no, this has been a great conversation. It's awesome to hear David's input. I love that sports is a lifestyle. I'd love to just take a minute here to hear a little bit about the sports and your connection. I mean, do you still have favorite teams? Have you had them? Which sport are you loving? I think those are the two kind of things I would love to hear from a sports specific from you, David.
Yeah, well, my biggest passion is football. And so obviously I represented the biggest names in football. I still work, I do a lot of coaching mentorship with athletes. So whether it's, all on the business side. So I don't do anything on the agency side at all. But I love taking kids like the Austin Ecklers of the world and the Michael Chandlers of the world and, Hakeem Byled, and taking these kids and teaching them how to structure a business, to scale a business, to raise money, to leverage their brand into an unbelievable entity. And so my passion lies in all sports / business, but my true sports fanship is mostly the original San Diego teams. So huge Padre fan, Los Angeles Charger fan. I actually have my office, my mastermind training center, my podcast studios in SoFi Stadium. So if anybody wants to swing by, I love when people come visit me at my office in the stadium. I'll give you a tour. Maybe we could do some content. But football, I could watch every level of football all day long. And what I like to play now is golf. I don't play except for with my 14-year-old son. That's the only time it's worth the time. But I really enjoy playing golf because it mirrors and is aligned with a life philosophy of, being able to take every shot on its own, every hole on its own, every round on its own. It's, to me, the greatest test of the skills, knowledge, and desire component that we talk about. So I love to play golf. But football to me is king. I love all sports, but football I could watch all day and night, any level. And what a great question. I know we're at the half hour. Sorry for rambling, everyone, but please come and follow me. Get my book at David Meltzer. You can find me, Google me, David Meltzer, and I will answer everything myself. Thank you, everybody.
David, it's always a pleasure having you on. Hopefully, we get to do this again with you in the near future. I see a bunch of people clicked into that post that I put up for your book. It's the last post on my timeline, so I encourage people to just go and grab it right there. Make sure that you're also checking out David's page right here. You can take a scroll through it. He also does exclusive dinners as well. If you want information on that, feel free to DM me. It's not super public stuff. I will feel free to maybe share with you in the DMs or have you reach out to David directly. David, thanks so much again for coming on. It was really a pleasure.
Oh, anytime, you guys. What a great community. And if anyone needs any help, you're following the right guys. So thank you so much.
Fantastic. All right. Big thank you to David. Make sure that you are checking everything that he's doing, as well as the Wolf Sports account as well. We are going to roll into my next chat here, which is going to be somewhat in the AI area, which I know people have been looking forward to. I was getting DMs throughout the evening. When's the space happening? We're looking forward to it. We want it. And you're going to get it. So we're going to be chatting with Sapiens here. I'm going to go ahead and I am going to adjust the title of the space. I already pinned up a post from them about the data age. And so I've got honestly my data crew on stage right now. Like this is the crew of all data crews. So I'm excited to jump in. Sapiens, let me turn the mic over to you. I believe it's Samir behind the account and then Akio's on here. Akio, if you want to go first, please just give us a brief introduction of yourself and what you guys do, and we'll take it from there.
Hey, Wolf. Thanks so much for the intro. It's good to be here.
Hey, it's great to meet you as well. Thanks for having us on.
Yeah, it's absolutely my pleasure. So, like I said, Akio and Samir, let's go ahead and jump into it. If you guys want to give people who are just unfamiliar with what you guys are doing off the top rope, what is Sapiens? What should people be paying attention to? I'll change the title of the space while we do that, and then we'll jump into some questions.
Sounds good. Yeah, Sapiens is an upcoming project in the AI and data space that we're building. I'm the CEO of Sapiens. My real name is Grant, and we're a fully doxed team. This is my personal Twitter handle. And Samir is on the Sapiens official account, who is our CTO and also a co-founder. Basically, what we're building is a decentralized data infrastructure. We think that in the upcoming era of AI, that data is just so important in sourcing data. And right now, there's not really many decentralized ways to source data. And so what we're building is a way for people to come together and pool data and then go and monetize that data. So a different way to gather data instead of going and, the current methods are web scraping, purchasing data sets, just a new and we think better way to do things.
Yeah, I like that. Samir, anything you want to add on to that?
Yeah. So, in addition to having like our own custom data sources, we also have an LLM-based access method. So having like a chatbot to be able to communicate with data sources that our users contribute. And then there's also like a data augmentation method, just like a bunch of different like kind of new advanced ways of communicating with data and preparing data for like the new AI world that we're kind of getting into right now with large language models.
Perfect. And just for those that want to be able to see as well as hear as we're talking, again, I did pin a post. It's the last post from their page. If you want, you can just jump right into that Sapiens page through the space directly, and you can actually see that you can go ahead and actually claim a badge through there. So that's live. It's spns.ai/claim if you're just typing it into a browser. And then you can also look through, there's a whole new website. A lot of upgrades came recently. There's a UI upgrade. Let's actually talk about that for a second if you want to cover that, Grant. You
Yeah,
guys
totally.
yeah, please.
Yeah, we started working with a really talented design firm that just kind of reworked our UI and our website. And I've worked with a lot of design firms throughout my career, and to be honest, I think that we finally found like the best one ever. The domain is spns.ai, and they used Three.js, which is a really cool library in JavaScript, and built just a really amazing experience, like a user experience and website. I think it's one of the nicest websites in the space right now.
Perfect. All right. Well, I want to get into the meat and potatoes, to be honest, sooner than later here. And I feel like this is right up the alley of some of the people that are up here. So I want people to be able to understand this, right? The fundamental principles of it, the vision. How does this actually aim to revolutionize the digital world? So let's kind of dive into that. You talked about, hey, we're building this decentralized data infrastructure. We want people to be able to group their data, monetize it, have control. Walk me through in simple terms, right? Somebody who's not a data analyst can understand it. How are you actually doing that?
Totally. So we basically kind of looked at a lot of different methods to do what we wanted to do, and created kind of a way that we think is really seamless and easy for consumers to understand. And that's through digital identity. And so a lot of people are signing up to create ID cards on different projects like WorldCoin, Galaxy, Passports now. And so a user will be able to create an ID card and go and just claim a badge. And then what they'll do with that badge is they'll connect different data points where they'll connect their socials, they'll connect their wallet, they'll connect their LinkedIn. And it'll all be very user friendly. And then they'll have the option, and they'll earn tokens for doing that as well. And it'll all be private. So they create their ID and they connect their socials, and then they'll be able to just join different pools, kind of like group chats. They say, "Oh, traders in the U.S. Yeah, that applies to me. I'm eligible. Okay, join." Oh, what's this one? People that work in real estate. Oh yeah, I work in real estate. My LinkedIn says so. So boom, joining that pool, and just kind of clicking through and adding different pools and beginning to monetize their data. So then, when customers come on and want access to different data pools, on a personal level, their data is not exposed. So, the customer is not going to see Wolf's activity, but they will see the activity as a whole, the whole data pool, of what they're doing as a whole, the behavior, the overall analytics. And then when they go and pay for that data, the data is then distributed to the people, the members that join the pool really seamlessly. And that's basically how we decided to do things. So we didn't really have to, have people uploading data or manually selling data on a marketplace, which is most of the solutions out there now. We thought it'd be best to kind of make it a really seamless, easy experience for everyone.
Perfect. All right, action. I feel like this stuff is best understood by you, and you ask really, really great questions whenever we're diving into it. What comes to mind off the top of your head? I feel like you're going to dig into how are you different from some of the others, right? Who's the competition? I think there's some obvious ones here, but what else is cooking up in your head?
Man, there is so much to be honest with you, and I'm actually okay now that I already claimed action as my username on your site, so I can talk about it now that I get that out of the way. So, um, I'm actually really curious. Like, let's get past all of the BS that people try to use AI for, right? Let's get down to the nitty gritty and what really matters here. What data are we really talking about? Because if you're leveraging people in different, data sources when it comes to individuals, are you trying to not only scrape, but are you trying to gather data that would otherwise be API blocked so that you can monetize that data and not have to pay the man, I guess you can say?
Yeah, so I think that contact data and behavioral data and also transactional data is what we're really focused on. I think there's big markets for those three areas. Currently, we have large database of contact information that we pulled through traditional methods like scraping, purchasing, partnerships, and we wanted to take it further. And that's kind of how we landed on Sapiens in general. Before this, I was working on a project with some guys at Visa in Singapore, and that was more blockchain forensics related. And I decided that I kind of wanted to pivot into the areas of more uh, off chain data as well, because on chain data can be kind of consuming in a way.
All right. So something I saw on your site is that you are talking about individual data nodes. Why are you calling it nodes, and how does that really play a part? Because anytime I hear nodes, I'm thinking mining, and mining is basically getting rewarded for something you're doing for somebody else. How do
Right.
these nodes work?
So your personal node will be a browser extension at first, and basically it will be kind of like your ID card where you can add different data points, your LinkedIn, your wallet, your Twitter. And then that node will start to pull data in real time. And you could call it like your personal data hub. And then you'll be able to go and monetize that node by joining different data pools and things of that nature. So basically, that's kind of why we called it a node, is because it hosts the data. And I think Samir could get more into that as well.
Yeah, for sure. So basically, the data, you could think of it as crowdsourced, but then also organized by these data pools. And so it kind of allows people to find what they're looking for without it being too, like right now when you try to find some like public data sets, it's like you never really know what you're getting. But our method kind of ensures reliability and like a way of like being able to trust the data as well.
Now, I totally understand that this is something that Lady Trader, your network might be interested in. Tell me, like, what's it look like for your community, your KOL? You're a KOL. What's your community think about when it comes to passive income through running these nodes and actually gathering data for others?
Yeah, absolutely. Thank you so much for having me up here today. And Sapiens team, welcome. I was actually looking at your project and I have a lot of questions. So I'm a key opinion leader, and my community invests in early rounds of projects, whether it's IDO, seed round, pre-seed round, private round, strategic, all of those rounds. And then also we strategically sometimes invest in projects that are already launched, if it is at a good valuation. That's definitely important. And AI is one of those areas that we are super hyped about, because we know that the potential is great for this bull run for AI projects. And so we are actively looking into AI projects. And then another thing that really stood out to me was how you are trying to establish yourselves in the digital identity field, right? That's a pretty decent category to be a part of as well. And then I think in the upcoming bull run, and which is already starting right now, there is definitely going to be some big opportunities in terms of digital ID plus AI, plus RWA, all of those categories. And by the way, I also went ahead and claimed my ID as well, Lady Trader, on your platform.
Let's go.
Yay! And so I am excited. I want to learn a little bit more about you. Obviously, from my community, we are excited for anything that's AI related. Obviously, it has to have good utilities, right? There is a good product that's out there. What we do is every time we are looking at a new AI project, and we are getting bombarded with AI projects every single day, right? So every time the new project comes in, it's like, all right, here we go, another AI project. When I actually went to your website, I did not have that feeling. When I saw, digital identity and a few other things, I'm like, okay, this is something different and something interesting, right? And so that really stood out to me. I do have a bunch of questions for you. First of all, I did notice that Astral Ventures are one of your partners. Is that a VC that's incubating you? Because that's another area that we focus on very heavily, is who the backers are before we, partner with a project or invest our money in a project.
Yeah, totally. So Astral Ventures is one of our kind of VC arms that's incubating us, as well as Misfit. And so, yeah, they're really just been great to work with. Misfit as well. Misfit's had a lot of successful launches in the space. Many have gone over 1 billion fully diluted. And yeah, it's just some really good projects on Bybit, on OKX over the last year. So, yeah, that's kind of the incubation side, and we're talking to a lot of great funds right now. I have a call later with Huobi Ventures, and talking to some great launch pads. So the backers are kind of scaling right now as we go through the rounds during May. But yeah, it's been great so far. I've gotten great feedback. Closed some funding as well from Unreal Capital, kind of the first ticket in, and they were early investors in Leica AI, HyperGPT, ChainGPT. So I'm very connected with different AI projects as well through them.
That's amazing. And by the way, I was an early investor in ChainGPT as well as HyperGPT before they launched. So
great.
really excited to hear. Yeah, so very, very excited to hear about that. And so as far as the tokenomics goes, I did not see any information about that on your website, on your white paper at least, or at least not in the categories that I saw. Where do I learn more about your tokenomics?
Right. So yeah, the tokenomics will be released soon to the public. We were kind of finalizing it up, and when talking to lead funds, sometimes it's kind of a negotiation and things change. So we didn't want to release it until it was final, which will happen. But yeah, the tokenomics are very well thought through. We spent about the last 4 weeks working on them. We brought on someone from who's a partner at Zokyo and runs a token economics firm, and did a lot of stress testing, and really wanted to strike a balance between having vesting schedules that weren't too strict where it deterred people, but not too loose where it caused like a lot of sell pressure. And also we really did a lot of research and find that linear vesting is a much better way to do things than like big unlocks. And we noticed that when big unlocks happen, there's just a big sell-off. And so we really stayed clear of that. And we see a lot of the competitors are actually doing kind of these big unlocks. And we think that we don't really know why. It's kind of like an old method. I think the daily vesting is really a good way to do things.
That's great. Daily vesting is definitely preferred, right? Or linear vesting, because then at some point you don't even remember that you have tokens that you have to claim. Right? It's going to be 2 or 3 months before you claim it. So yeah, that's really fantastic. So you said that you are already chatting with some of the VCs. What round are you currently raising, and at what valuation? Can you give us any information around that?
So we're raising the private round right now, which is at a $15 million valuation, and the public is set to be around a 30. And yeah, talking to the top launch pads right now. We did a seed round at a 10, and we have a strategic KOL round as well, which will be at a 20, but it'll have more preferable vesting terms for KOLs. We have around 20 KOLs subscribed to that so far, but our ambition is to scale that up to around like 200 KOLs, 300 KOLs to join the round and support the project.
Can you tell us a little bit about which KOLs have already been onboarded?
I'm not 100% sure the exact KOLs right now. We have a KOL manager who's been dealing with that, and a few agencies that we work with. But closer to launch, we can definitely, we'll definitely be releasing that information, and you'll be, hearing more. And once we lock in a launch pad, we're going to be scaling up the KOL outreach quite a bit. So maybe, you'll hear about it as well.
Yeah, absolutely. Because I do definitely partner with all of the major launch pads, and I would love to help you guys as well in any capacity. One other question I have is, when I go to claim my ID, it's actually pretty easy, right? All you have to do is just manually enter your email ID, your username, that whatever you want to reserve, and then just have to put, your username, wallet address, and your email address. Those 3 things, and pretty easy. Don't have to sign anything, right? Don't have to do anything there. But then this also creates an opportunity for anyone to become anything, right? So are you guys doing anything to do like a verification process or anything like that? Or is it just like first come, first serve? I can reserve anything I want, right? Obama or Trump or anyone else? Or are you going to have something in place to kind of protect that?
Yeah, so for usernames, it's really kind of open season. But when it comes to identity and when those features are unlocked, it'll be more KYC based and more verification based. But right now, claiming a username, we wanted people to have fun with it and be able to claim just like a gamified username, or kind of how my Twitter handle is Akio Nakamoto. My username is not always going to be my real name. So yeah, that's kind of what our thinking was with username.
Gotcha. And then you said KYC tied to your identity, which is great. What about the people like myself? I'm not doxxed at all. No one knows my name. No one knows who I am.
She thinks she's not doxxed, but go ahead.
Okay. And so I'm not doxxed, but how does it work for people like myself who don't want to connect their KYC or anything?
So there will basically be different data points that you can connect. So one of them will be KYC, one of them will be wallet, one of them will be LinkedIn and socials, or Twitter handle, Telegram handle. So basically, there's different kind of options and different things you can do. If you don't want a KYC, you just won't be able to join certain data pools that require it. Like, let's say one of the data pools is traders in the US or traders in New York, or that type of data pool. But if it's a data pool for like KOLs, or a data pool for traders on Solana, these are different data points connecting to different data pools. So yeah, it's kind of a preference based system.
Perfect. I have one last question before I pass the mic off to Kayla. Do you have any plans on monetizing the pass that we are minting or claiming, or the badge that we are claiming? I did see something about the airdrops that are tied to it. Can you give us more information around that?
Yeah, so everyone that signs up will be part of the airdrop, and we also have Galaxy campaigns going. So those are the two areas where the airdrop's happening right now. So if you go and claim a badge on the website, you've secured some of the airdrop. And if you give a valid EVM wallet, which if you don't, you won't get the token. So I hope people kind of realize that. But also, the Galaxy is another place we're doing the airdrop right now.
Perfect. Thank you so much. Kayla, you can go ahead.
Hey, I really love data privacy, and I'm curious how the platform will ensure user privacy and security.
Totally. So on a personal level, data will be obfuscated, and that's through different cryptographic proofs like ZK, and kind of some other ones that are newer that we're looking into. But basically, if I join a data pool for my trading activity, let's say it's Binance Smart Chain Traders, then people won't be able to see like Grant's trading activity when they go and query the data pool, but they'll be able to see overall Binance Smart Chain Traders activities, which will be everyone in the pool combined, and identity will be kind of hidden at that point. If it's an identity specific pool where it's identity data, then there's different privacy methods, and that will be kind of specified and clear. Let's say it's like contact information, then personal data will probably be revealed to some level, like email, but you'll have a choice to join that pool or not.
So it's really tough to encrypt data, especially with identifiable factors. What kind of encryption are you guys using?
Samir, you want to talk about that?
Yeah, I think it'd be best if we just if we don't share too much on that. We're still kind of working on that, but we're working with some experts in the field to maintain privacy. That is one of our top priorities.
So talk to me about the data collection itself then. So, I mean, hashing out data is fine, but what is it that you're actually gathering? Because I know you list behavioral data, abstract data, and mixed data, but are you actually gathering unique identifiers for users themselves, or are you just looking for generic data?
So it'll really depend on the pool, and Samir could talk about that too, but there'll be different types of data for different pools, some contact information, some social media, and then some on-chain data. So I think what's really makes kind of the data valuable to people that are looking to go and query it is something like, let's say I wanted kind of trading data for people on Solana right now. So that's out there, you could go on DeFi Llama or Dune or something like that. Let's say I wanted Solana trading data for people in a specific country. So that wouldn't really be available without this identity piece that we're doing. So that's kind of where things start to get more valuable for the revenue side of things. And Samir, yeah, maybe you want to talk about that?
Yeah, I like the Samir guy, by the way. He seems to know everything, right?
Yeah, he is our CTO.
Would you be able to clarify your question a little bit?
Yeah, so I know that you can gather all types of data when you're actually doing this sort of data aggregation. How much are you actually gathering from the user itself to uniquely identify who that user is? Because I know you mentioned some of social media data. Are you gathering the individual user's information, or are you gathering the information that the user can actually see?
So, one of the, I guess, like, kind of starting with the easiest one is like the KYC method, which we're using like a third party company to do that for. And so I think that would be like the most straightforward. I mean, like, that basically the goal is to be able to prove that this person is tied to a single kind of like entity, like a single account, and to kind of eliminate having duplicate accounts, or like bots kind of on the platform. And so, it's going to be a combination of, I guess first, if they pass the KYC test, and that kind of clears everything. But then the second thing is going to be, are there other kind of users with like a similar profile that already exist? So like, is someone is there like a person who's trying to like copy another person that's already on there? And so, those are kind of our main priorities right now. And then when you like log in with your socials, that like creates um another way of proving your identity. And so we look at like how long ago was this account created, what is kind of like some of the most recent activity, kind of just like doing a very light scan of the public data that's been posted by that account, to make sure that it's someone that isn't just making a Twitter account to try to mimic someone else who already has like a presence on the internet. That's kind of like, being able to prove that this person is like there's only one of this person on the platform is kind of like the main goal right now. But our as we get more users and come across different problems, we'll definitely be evolving our techniques.
No, that's awesome, and that's definitely something you got to be weary of, because dupes are happening all the time. People try to double down and essentially double earn a lot of times. So that's actually a really good thing to look into. And I'm sorry, I know you probably didn't expect a bunch of technical questions but we got a bunch of nerds on stage, so I apologize in advance. But we love this stuff, man. We just love this stuff. Shout out to David in the audience. David 10X, I miss you, homie. Hit me up. But Toki, you're up next, brother.
Thank you, Action. I appreciate it. This is actually a pretty cool project, just in the sense of how the AI is also kind of fluctuating within the whole entire means of it. I am curious, though, as far as, are you going to be using any of this data to be tracking or identifying individuals as well as, or are you trying to make sure that this is more on the keeping the privacy side of things?
So really, in terms of like on-chain data, we're not really interested in tracking or revealing anything, because we think that's really sensitive information. But some of the off-chain stuff can be more open, depending on the data pool, like where you kind of what your Twitter handle is, for example, or if someone's trying to find like influencers in the space, and you're in a data pool for influencers in the space, then maybe your handle would be something that would be revealed, and maybe like follower count. So that's something where if you choose to join an off-chain data pool, it's less sensitive. But if you're choosing to join like this is my wallet address, that's the type of stuff that we're gonna be really we're gonna be so encrypted that we don't have access to it as well. Kind of using IPFS or something else, some of the new technologies, but looking into that.
And when you say that you're kind of taking it as far as, like, are you actually going to be congregating that type of data, or are you just trying to ensure that there's an ability to reach out to the right groups?
So yeah, we are interested in that type of data, in contact information and influencer data. Currently, we have a lot of data on like email addresses of BD companies in the space. So like our LLM is loaded up with, hey, I want to reach someone at Coinbase, or hey, I want to get listed at Bybit, or hey, I want to talk to Animoca Brands or A16Z. So that would be attached to kind of like more of the contact information side of things, and people would have the option of like what to reveal there. Then more on like the analytical side of things, or the on chain trading side of things, it would be a lot more encrypted.
Okay. Thank you
And
very
then
much. I appreciate it.
I also just wanted to add in, Grant, if you want to kind of mention on the monetization aspect of that, like you control how much you reveal and share with the platform, and then depending on your, I guess, popularity, there's also a monetization aspect of that. But
Right, yeah. So a lot of it has to do with demand and querying like specific things, and that's kind of where the token economics comes into play. Also, staking tokens against pools. So basically, people will be able to deposit coins into different data pools, kind of like a liquidity pool, and earn from the profit share through doing that. And that enables people to hold the coin and stake the coin in kind of a new staking method that we created.
Talking about popularity, Kayla, you're up.
So I really love encryption and I'm really obsessed with cybersecurity. So I won't even join a platform with the same address of anything most of the time. I'll make a different phone number and a different email address. So, like somebody like me is very rarely incentivized to ever aggregate my data. Why would I join a data pool?
So, for example, if you're an influencer and you're looking for kind of more business, and people are searching for influencers in that data pool, then there'd be incentive to join. Or if you're a VC and you're looking for deal flow, or you're just a person trying to monetize. But if you're talking about wallet and on-chain data, then yeah, a lot of people will probably be will be more hesitant in the crypto space to provide on-chain data, but the off-chain data targeted towards other industries as well.
So, what is the literal incentive for joining a data pool?
Mostly token-based incentives or finding other information. So signing up is kind of a requirement, and if you're looking for data, then that would be incentive, or if you're looking to earn.
How do I earn exactly with my data? I give the data to earn, but I would have to like be making more data, right? When I'm
So
trying to
basically,
use as little as possible to identify myself.
so it depends on which pool you join, but if you're trying to not identify yourself, then you can join pools where you won't be identifying yourself, and that'll be specified.
Grant, I think she was asking a little bit more about the monetization. Like, how do you get paid to share your data?
So when you join a pool, basically, once that pool starts to bring in revenue, then the revenue is distributed to the people in the pool based on head count.
Kayla, does that kind of answer your question? Or
A little bit. I'm still confused why those people are incentivized in that pool.
so, I mean, basically, there's like a pool of, let's say, people who work in real estate, and there's a demand that exists for real estate data of like, something that you're noticing about, let's say, like a hyper local neighborhood, like a specific neighborhood. Let's say you aggregate that data with other people in a pool, and as people start to buy that data, I mean, you don't even have to update it that often, but as people start to buy that data, you kind of get a cut of the overall pool tokens.
So similar to how people are incentivized to join like a marketplace, or just anything where commerce happens as well.
So kind of like a data broker marketplace almost.
Yeah, that's a lot of functionality on there, which has a lot of functionality for like training AI models, or just getting custom data sets for different things, like BD, for example, or DeFi Llama wants trader data, etc. But yeah, on a personal level, it's not our intent to kind of KYC people like an Arkham or someone like that. That's not really the business we're in, which is why we're doing it in a very decentralized way. Arkham.
I appreciate you bringing up the best, thing that I don't want to be associated with. So yeah, that was a good one right there. Uh, Next, go for it.
Thanks. Can you hear me? I'm having so much trouble with spaces today.
You sound beautiful.
Oh, hearts. Thank you. And hey, Sapiens team, I'm having a really good time looking through the white paper. I'm not as much of a tech nerd as everyone here, so it's a little bit like I'm seeing it all in separate parts. But the last conversation sort of clicked in my head. So, as a marketer, data is gold for me. Obviously, like back in the day, whenever we wanted data for marketing and we're trying to create our ideal customer profile or create some sort of set of habits or some sort of psychographic demographic data, we used to have to spend so much time to hunt all of that stuff down. And so I know that whenever now as time goes by, we now buy data sets from companies. So for instance, you can get a lot of data from just Facebook, for instance. Like, I'm not sure if anybody's ever seen that, if you've seen like how Facebook sort of organizes you as a data, like they've created this whole psychographic on you. You can actually, it's public, you can go look at it. So what I'm sort of seeing here from the previous conversation and what I'm looking at your white paper, it's almost like you're incentivizing people to use their own data as a sellable asset. And that's actually how I see you have it worded here. So it's like the idea that somebody has, a background in healthcare, and all of these other psychographics, that becomes their set of data. That's like their data pool, for instance. And then instead of me as a marketer going out and looking for that set of data from a big business, it's like I can give that money back to the people who own the data. Did I kind of understand that well?
Yeah, totally.
Oh, cool. I'm
That's a
amazed with
really
myself,
kind
actually.
of big selling point with decentralization, and the data's already there and already being sold. So yeah, we think like, why not monetize it yourself?
Yeah, I absolutely see like the vision there. So I'm also now on your white paper, like talking about the market overview and the forecast, and other things that sort of stood out to me were just really getting into B2B. Um, and all the potentialities with Internet of Things, AI, AR, VR. Well, like as a marketer in just this one sector, it's just marketing, which is very data focused. I know all of us are sort of like creating this like made up predictive analysis of like using parallel data to sort of predict where we think the market's going to go in all of these new places. But I find this is really fun and interesting way to sort of, take it a little bit to the next level. But it is my next question, and this is more of like a visionary scenario question. But when you guys came up with this project, like what was the ideal impact that you foresaw years into the future of like how it might help people on a on a larger scale versus like a personal impact?
Right. So I think a big thing these days is like the rise of AI, and everyone knows that.
Mm-hmm.
But like, I think that the implications of that could be kind of things we're not really considering right now, like deep fakes or you know
Oh, agree.
privacy issues kind of arising. And so we wanted to create an ecosystem that people could start to kind of monetize their data in a private and secure way, which is already happening, and kind of start shifting their data over to kind of more like in their own hands and away from kind of um, like centralized hands and on chain. And also doing stuff like, identity and ID cards and credentials and KYC verification. We think that's important for kind of verifying who you are and having like a digital kind of security system.
Perfect. All right, what's up on your mind, Cade?
Oh,
Oh, sorry.
sorry
Yeah, I
about
think
that.
there's some wrecking going
For
on there.
my kid, yeah, I think I had a mic issue for a second. I'm so sorry. Thank you so much for asking that. I'm gonna step down because I just have so much troubles with spaces today. But this is a really cool project. I'm having fun looking over the white paper. I wish I could ask you guys so many more questions, but I will, pass the mic down to, I believe Cade was next. I see his hand down. Kayla.
I think we're going to Cade right now.
Yeah,
Yeah, he was already speaking. Go for it,
I'll
brother.
drop one in here, bro. I'll drop one in here. And honestly, bro, I'm really hoping this wasn't already answered. The question got a bit technical earlier, and I
can't hear
wasn't
him.
prepared for that either. But my question was kind of around this. So, what is kind of the conversation around where centralization becomes important in a company such as this? Versus having a decentralized or governance model, and like where are you guys with it? Is there any flexibility in this? As the tech evolves, as the conversation changes. I know Kayla and I have a bunch of conversations over on Wolf Web 3 in this regard, and there's new stories every single day, and there's totally new opinions every single day.
Thanks, Cade. Yeah, we think that a balance is good to have right now between centralization and decentralization. And we think that like certain aspects should be centralized and certain aspects should be decentralized. So like parts of the ecosystem that are really kind of sensitive and things like your on-chain data, we don't really want you kind of handing that over to us, and that data is already basically pretty public. So because blockchains are all public, and so like yeah, certain aspects being decentralized and certain aspects being centralized. I think that if the platform was fully decentralized, like and everything was up to a vote, it could kind of get crazy. And I think that like um, I'm not sure if any apps have done that yet, where like everything is voting based, like every single feature upgrade and things like that. But that would be interesting to see actually.
That's reassuring, to be honest with you, that you're not actually looking for that type of data. But Kayla, get your hand up. Go for it.
I definitely get the idea more now, and I think a lot of people in this decentralized area want to profit off, what they're doing with our data. So could I, in theory, dump a bunch of data into this and then kind of see what happens, see if it's valuable data with your guys' platform? Like, let's say I had a bunch of emails from 10 years. Could I throw that in there and kind of see if that's valuable?
Yeah, I think like it depends as the project scales and the types of data will also scale. And yeah, we kind of have this system where people can upload stuff, and if it doesn't get any demand after a certain amount of time, then it'll probably be removed. But if it gets demand, then it'll kind of self-sustain and pay for its own hosting costs. And so having that system in place where we front the hosting costs, and if no one wants it after a certain amount of time, then it gets removed. But if it's in demand, then it's kind of self-sustaining with the hosting costs.
That's a really cool profit model. And so, when you say self-sustaining, am I like a node operator at that point if the data is good enough?
Yeah, so then the revenue coming in will kind of pay for its own hosting costs. So yeah, I guess so.
That's a pretty novel way to look at data. That's really cool.
Perfect. Let me flip back in real quick. We've talked through a bunch of stuff for those that came in late. We really walked through Sapiens here, and I want to just remind people, if you haven't yet, you can go ahead and you can claim your Sapiens badge. It's officially live. You can go right through the post in the top of the space to claim it. You heard from Action and others who claimed theirs, so check that out first. Number two, we walk through some of these decentralized identities, right? Leveraging that concept of a decentralized identity to enhance user privacy and control. Ultimately, you're trying to monetize here. We get it, right? But you also want to have that privacy and that control over your personal assets, your data, all these things. I mean, that's why Kayla's digging in so hard, right? Like these are important things that we are sharing. They really manage our lives. Data management inside Sapiens. We talked a little bit about how y'all are using queryable and searchable data pools, right? This is to simplify data management, accessibility, and really, I think we talked about how this feature allows users to efficiently retrieve specific information from large data sets, right? That's the idea here. Specifically retrieving exact information from large data sets. And of course, building in monetization, which rolls me to my next point. We talked about how you're enabling data monetization. You're allowing these businesses to unlock the value of their data. This can involve selling data, improving products, services. There's a whole lot of ways that data kind of makes the world go round. We do often say data is the new oil. I did have a question, and we talked a little bit about this perhaps, but not too far. Walk me through how you guys are using AI further inside of data management. I think AI plays a crucial role inside of AI and data analysis these days. So maybe you can go further into algorithms or other pieces that you're using, and maybe not even stuff you're doing right now, but also in the future plans that you have.
Yeah, so I can kind of take that question on. Right now, we have some custom trained models on our, I guess, like proprietary data that we're kind of getting the company started with, and we have like I think Grant, if you want to talk a little bit about the example, but we have some contact information, and we've trained our models on this data, and so like, let's say you want to talk to some people at Coinbase or some other company, you can kind of query this model and chat with it, and it'll provide the contact information and like names of people that we have kind of pulled our personal sources together to form this like data set with. But and so having like an LLM interface to query the data is like a little bit simpler rather than having to write your own SQL queries and kind of like comb through a spreadsheet. We have like a data augmentation technique that's able to adjust data and really like understand what's going on in each single like cell of like a spreadsheet, for example, and kind of like help you search through data a little bit faster. And so that's just like kind of like the initial step. We're going to be using AI in a few different ways as well. Like some of it is going to be used in like the user identity verification step, and then we have a couple other features kind of like coming out in our long-term plan. But every kind of step of the way, like if there's something that we feel like could be using like a little bit more like intelligence to make the product better, we're going to be kind of implementing some sort of AI in that step.
Perfect. Appreciate that. If any of my folks on stage have any AI questions, feel free to jump in and with them. We did talk through also. Oh, well, 3 hands.
Yeah,
Lady
got
Trader.
a lot of hands up.
All right. So a couple of questions, actually. Whenever we are talking about AI, the information that's already out there, that's pretty phenomenal, right? And there are already platforms that are available where people are training AI with their knowledge base and things like that. How is this platform, like, why would anyone use Sapiens? How do you differentiate between your platform and the other platforms that are out there? That's one question. That's the first question. The second question I have is the information that you're talking about, from the real estate category to all of these other areas, trading even, you can get a lot of that information already by Googling, right? So what's the differentiating factor here? Why should we use Sapiens platform versus everything else that's out there, when we talk about data?
Yeah, I can answer the first one, and then Grant, I think you should answer the Googling one.
Okay, cool.
So the first part, I guess, like, with our data pools, one of the like kind of the neat features that we're building out is being able to automatically feed your data into a model training pipeline. And so each of our data pools, we're still working out the infrastructure part of this, but each of our data pools will have a way to kind of train a variety of different models, not just like LLMs, but a variety of different models to be able to actually like use that data and like run predictions with that data. And so starting with, let's say, like some sort of like healthcare research data, if you want to use that to predict how some, like, I don't know, diabetes study is performing, you can use some of our built-in AI-based tools to clean the data up and then feed it into like one of our model training pipelines, and then actually do something with that data. We also will have API access, so you can pull the raw data and then kind of feed it into your own custom model training pipelines as well. So we have like kind of a lot of like other features kind of in the pipeline that we're coming up with, but I think the first step is just trying to is seeing how users interact with the data pools concept initially, and then seeing what types of data is put on the product, and then kind of building out additional features after that. So Grant, if you want to take the second question.
Yeah, in terms of kind of what differentiates for us versus like a Google search is, when it comes to data and this type of information, it's not really easily accessible via Google, especially in bulk. Let's say you wanted to search up and this is just an example, but let's say you want to search up like the phone number of a pizza restaurant nearby. Like, yeah, that would be on Google, but then like, let's say you wanted like the phone number of every pizza restaurant in like Los Angeles, then that's something that would take a long time to search through to like Google all of that, and that's kind of where data pools come in and querying data. Also, like the ease of access is important. Like with the AI, just getting ease of access to data, I think sets it apart. And LLM search, I think people have started using ChatGPT a lot for just general searches versus Google. Like, let's say I wanted to figure out like when I don't know, sparkling water was invented. Like some people you would use Google, and now a lot more people are switching over to ChatGPT.
Gotcha. Okay, that's great. Thank you so much. The other question I have is about the product that you're building. So on your roadmap, first of all, you did list that you will be launching the product before you launch the token, which is great, because what happens is that in crypto world, especially, companies have all of these big plans, right? They're going to be launching this really great product. This is going to be all great. And, then the next thing you know, they are a multi-billion-dollar valuation already that they're raising, but they don't have anything. All they have is concept. They're talking big, but they don't really have anything built. So just the fact that you are going to be launching the product before the token, that's absolutely fantastic. That's great. I want to learn a little bit more about that. Where are you guys at currently with the product? Do you have anything that you can demo the communities? How is everything coming along?
Yeah, so we have some products done already, and we are building out some more features and kind of piecing together what will be in the initial MVP, and set to launch that. We don't have an exact timeline, but before the token launch during the summer. And so, yeah, I agree with you. There's so many token launches where um, they don't end up launching the product, or the product ends up kind of being like a failure, or like the NFTs for Pixelmon. But basically, we think that, yeah, like launching sometime in late June or July is what it looks like.
Thank you.
Sweet. Kayla?
So
In
it's
3/4 of a mile.
sorry guys. So it sounds like the chatbot is the aggregator. Am I going to get to talk to the chatbot and be like, hey, can I have influencers in Web3?
Yeah, that's the method of query that we're going with. And we think that adds a layer of privacy as well, where instead of just being able to see all the raw data, you have to ask a specific question and get a specific answer. So, the raw data isn't visible, but just what you're asking for.
That adds a huge layer of privacy, to be honest. So that's actually really interesting. Do you think that have you guys talked to anybody about like how much more privacy that would add?
Yeah, so that was kind of the original kind of thoughts on privacy that I had is the whole LLM kind of black box is what I was calling it, where data right now, how it's passed from one person to another is, let's say I wanted to send you contact information, I'd send you like a whole CSV of contact information, a whole Excel spreadsheet, and then you'd have all of that. You wouldn't need me anymore, first off, for contact information because you'd have the whole thing. So in terms of licensing and monetization, it's bad for me. And then also, then you'd be able to kind of see like everything at once, and you'd be able to know the full size. You'd be able to scrape it and then go and resell it as well. And so like for example, PitchBook has a huge problem because everyone just scrapes it and then sells these lists on LinkedIn of investors. But like they're selling it for 15,000 a year on PitchBook, and it's less valuable because of that. And so if they had an LLM where people had to ask, they couldn't scrape. You can't scrape an LLM because you don't even know what you're scraping or how much you're scraping. So yeah, I kind of
That is insane. I mean, you'd have to penetration test the model in order to, get access to our data. So that's probably the coolest part.
And I also wanted to add that the platform will have tools to be able to like train your own models and stuff. And so, we're trying to keep it so that you can all the data can like remain like secure on our platform, and then we're creating different interfaces to be able to use the data in a very like private, secure way.
Yeah. I mean, there's a really big difference between giving your data to something that, can be accessed and scraped, and then something that you have to penetration test. Few people even know how to do that. So that's really cool.
Sweet. Yeah, action, and then we'll move into some closing comments.
I love that Kayla left after saying penetration test. But real question here. I know that a lot of people come out and say, run these nodes or be a node and all these things, but ultimately they struggle to actually monetize it, right? I mean, perfect example is Helium. We had almost 1 million nodes out there and they were making $3,000 a month off of the data. How does that environment look for you guys? Do you have a way, contacts, or the means of monetizing and actually selling the data?
right. I think that that's a really good point because if there's no demand, then it doesn't really matter. And so we've been doing a lot of testing across industries through our network. Already have a few VCs as clients. Basically, they're using it for the data that we already have. So contact information, BD, like let's say they want to get one of their portfolio companies a grant, they could contact like Solana or, someone like that. And that's through the LLM that we built already. But basically, we also were talking to people in the media and entertainment industry here in LA where they found it interesting for that industry and finding contacts and finding data, and a few law firms as well here, and a few Web3 companies for raising funding. We think that's really something people are interested in. I think that like selling to analytics companies will also be important, like DeFi Llama or something like that. Maybe having like a widget or a plugin on their platform. But yeah, I mean that's kind of the monetization that we're considering so far.
Oh, Kayla's got one more. Make it quick, Kayla. Make it quick.
Well, okay, so yeah, it's really tough to keep up with grants in Web3, specifically like decentralized grants. They're expiring all the time. Even the pages are not there most of the time. So it would be amazing if you guys could verify those. Do you think there's a mechanism to verify if they're still there?
Samir, what do you think about that?
Sorry, you said verifying grants?
Yeah, so like you could aggregate all of the information about grants and into this chatbot, and then we could see if they're
gotcha. Of like research grants, yeah. I don't know too much about that. I've like had to deal with I came from a research background, and I've had some experience with kind of signing up and sifting through grants myself. But I think that that's kind of like providing like it kind of goes into like the question of whether or not the data is like someone is uploading like junk data. And so, it's just like if there's not going to be any demand for that data, I think we do need to create a way that someone can report data and say like, oh, this is garbage data, like spam, or has like personal information or something like that. And so I think having some sort of system like that would be able to clear up something like that. But we're kind of like letting it just go to the the economy of the platform. Like if there's no demand for it, then it'll there's like a time to live for all of the data. But I think we'll probably have some sort of way to report if someone is like consistently uploading like garbage data or personal information.
Yeah, you can even use another language model and just check if this data is real. So that would be amazing.
Yeah, I mean, so we are using language models to look through the data and see like what type of data it is. Like we are kind of like categorizing it a little bit. But with like grant data, for example, you can have a language model like spit out really realistic looking data, like a bunch of different grants, and like write up a bunch of different reports and like requirements to get those grants and kind of upload all of that. So it is like with something that I guess like this is kind of like into like next year, like the year after's kind of are like ideas for like the kind of like next stages of the company is like using like AI agents. And so that'll like I think you need like to have some sort of like internet access to be able to verify things like grants. And so like that moves into like the AI agent space of like having an agent read through the data, go do a Google search, see how legitimate it is. But I think that level of verification is still, the technology just like isn't there yet. So eventually I think we will move towards that.
That's really cool. Thanks for answering so in depth.
Beautiful. Really, really fun space here. Clearly a lot of interest in this. I think you had the right speakers on the panel for what you're building as well. So big shout out to everyone that's been on this panel. I encourage everyone in the audience to go ahead and give them a follow. Make sure that you're checking out everything that they are doing. I will turn it over to you, Sapiens, if you have any final remarks from each account. Akio or Grant, would you like to go first?
Thanks, Wolf. Yeah, it was really great having everyone and talking about the project and answering everyone's questions. Thanks, guys.
Samir?
Yeah, thank you so much for all the really great questions. We got us really thinking about a lot of things, and it's great. We'd love to do this again.
Perfect. All right. Well, thanks so much, everyone, for coming on. Like I mentioned, make sure to claim your badge before you go. We will be back on Spaces tomorrow morning. If you're on this panel, you're invited. It's going to be at 10 a.m. Eastern. I think I probably let most of you know that's happening. We're going to be diving into the lending markets in this world of Web3. So it should be an interesting one. Again, everybody on the panel, set those reminders, 10 a.m. Eastern. We'll see you there bright and early. Take care, everybody. Have a great rest of your Wednesday night.